important to note that the frictions that are happening between the U.S. and China, this is much bigger than the economics. This is all about the entire relationship between the U.S. and China. This is about intellectual property theft. It's about industrial espionage. It's about resetting our relationship with a China who has been taking advantage of the U.S. for a long time. And now this isn't just about putting 10% tariffs on $300 billion worth of goods. It's the incompatibility of two economies butting heads with one another. I think we're seeing a microcosm of that in just the relationship between China and Hong Kong right now. I think it's important to realize that this one country, two systems that Hong Kong has existed under really depended a lot on how China took a hands-off approach to Hong Kong, and with its most recent enormous misstep trying to push through an extradition bill through Hong Kong's legislature, the people of Hong Kong are taking over. From an economic perspective, Hong Kong's trade with the rest of the world is more than 3.5 times its GDP. And if Hong Kong is treated as China, the dynamics of Hong Kong will dramatically deteriorate. And I think that's what everyone's starting to realize today. The one-year forward price of the Hong Kong dollar versus the U.S. dollar is actually trading through that peg of 7.85. It's trading at 7.8505. Mm-hmm. So that is an interesting precursor to what's to come. Now you have a problem with maybe Chinese army or Chinese police coming in to, quote, restore order and let's say maybe even enact martial law. And when that happens, the freedoms of the Hong Kong people that they thought they would have until 2047 will be snuffed out. They have an absolute closed currency system. When you look at their economy, supposedly represents 15% or more of global GDP, and currency settlement in the Chinese yuan has gone the other way, and it represents less than 1% of global currency settlement. They prop up their currency. They're trying to hold this ball of wax together, this whole charade that their currency is a real global currency. And when they finally have to let go and stop selling dollars to buy yuan to maintain an artificial level, you see what happens to it. So they've done that a little bit today, and it's moving, roughly 2%. But if the yuan were to free float tomorrow, it would depreciate 30, 40% against the dollar. They have a very low level of dollars. They built a pile of dollars up, hollowing out our industrial base, and they've been bleeding those dollars because they run a huge fiscal deficit. Their current account is now going to move into a deficit from now on indefinitely. And the flow of money is going to be out, not in dollar terms. And so when you say, what can the U.S. do? I mean, all four of the Chinese banks, the big four banks, today they're under consent decrees with the U.S. Department of Justice for money laundering, and they all process payments to sanctioned entities in Iran and Russia and all these places. All the U.S. has to do is enforce its laws and sanction the big Chinese banks and take them off the SWIFT system, and that cripples China, i.e., they have to have dollars to operate, and they don't have any dollars, and we hold all the cards.